and welcome to the 6th episode of Budget with BS. Union Budget 2023 is just a week away, and our reporters have their ears to the ground so that you don't miss out on anything. I'm Nivedita Mukherjee.
And I am Ruchika Chitravanshi. A very warm hello. With the budget round the corner, the newsroom is getting busier and noisier by the day.
In the previous episodes, we have looked at why the budget is so special and the geopolitical backdrop. Plus, we have covered areas like taxation, manufacturing, and disinvestment. So, what's for today, Ruchika?
The spotlight today is on a subject that's at the center of everything: agriculture. We must remember that rural economy and agriculture are extremely important in this budget because we have general elections next year. After all, a large chunk of our electorate belongs to rural India. We have Sanjeev Mukherjee telling us what's on the table in agriculture.
So Union Budget 2023 is the last full budget of the second term of the Narendra Modi government. There's a lot of expectations from the rural and agriculture sector from the budget, given that a lot of supporters and vociferous supporters of this government stay in the rural areas. Let's see what this budget contains for them.
Union Budget 2023 will be the last full budget of the second term of the Narendra Modi government. As a result, a lot is expected for the agriculture and rural sector, given the sizable chunk of voters who reside in the countryside and who have been the key electorate for the ruling dispensation. In the past year, the centre has spent liberally on schemes for rural and agriculture sectors, irrespective of the fact whether it has been an election year or not. A tight fiscal position in the last 2 or 3 years, first due to the COVID-19 pandemic and then because of the Russian invasion of Ukraine, has made things challenging for the government. A tight fiscal situation and elections also mean that any big reforms would have to wait for another day. The centre would first like to consolidate existing programs to ensure their timely completion. This may be dovetailed with more populist ideas before undertaking any new or bolder measures.
We saw the introduction of PM Kisan scheme under the Ministry of Agriculture and Farmer Welfare. And this is one of the largest cash disbursal schemes in the world in terms of the number of people it touches, which is close to 11 crore. Now, today, this scheme accounts for around half of the expenditure of Ministry of Agriculture and Farmers Welfare. So one could see a continuation and focus on these short-term measures, especially given the pre-election year context.
Also, the spike in global and domestic prices due to the Russia-Ukraine war and its cascading impact on fertilizers will continue to pose a big challenge for the government while allocating funds for the rural and agriculture sector. Despite signs of a cool down in the commodity price complex across the board, it will continue to exert pressure given the global economy's uncertainties.
Prices for commodities like gas, phosphoric acid, sulfuric acid, a lot of which gets used in the fertilizer segment. And when one looks at the budgetary allocation for agriculture, one also needs to look at the Department of Fertilizer and Chemicals. Like, for example, if you look at the allocation for the fertilizer subsidy, that stood at around 67,000 crore in fiscal 18. And as per the budgeted estimate for fiscal 23, that stands at 2.15 lakh crore. So that's over a threefold jump in just 5 years. So that, this just underlines the sort of challenge the government has been facing on account of the rise in commodity prices. And that sort of, puts pressure on them to allocate money to various other aspects that they would want to spend money on. But the good news is that we're seeing a decline in energy prices now. Crude oil has been trending lower than $80 per barrel for the last few days. We're also seeing expectation in some correction in gas prices in the coming future. And that should sort of alleviate the stress on the fertilizer budget.
One area of concern in this financial year and even earlier has been the very slow rate of economic growth in the rural areas. This has been manifested in various data points, like your two-wheeler sales have not picked up, your rural wage growth hasn't been very robust, demand for Manrega work has remained very strong despite a visible uptick in economic growth elsewhere.
The budget might look for measures to address this growing dichotomy between the two. A recent report by Business Standard showed that real rural wage growth has virtually stagnated or has been negative in the first 6 months of FY23. The growth in nominal terms has been steady, but the sharp rise in inflation has eaten into the increase. The wage growth in rural areas, which showed signs of uptick immediately after the first nationwide COVID-19 lockdown was lifted, has returned to its old pattern of nominal increases or even degrowth in some months. This is also manifested in continuing demand for Manrega work in rural areas. Demand for Manrega work in FY23 has been less than the peaks of FY21 and FY22, but is still higher than pre-COVID years of FY19 and FY20. During the pre-pandemic era, around 50 to 55 million households used to seek work regularly under the scheme every year. Since the pandemic struck, this number has jumped to over 70 million per annum. Moreover, in terms of budgetary provisions, before the pandemic, around 70 to 80,000 crore used to be spent annually on the scheme, which since the pandemic has jumped to almost 100,000 crores per year. One way to address the growing stagnation in the rural economy is to increase spending on building rural infrastructure like roads, houses, sanitation, and water supply projects. Given that these have a high recall value and good optics going into an election, this might be the way that the government will take in Union Budget 2023.
Sanjeev's report suggests that there would be new schemes for rural India ahead of 2024 elections. But it's a challenge for the government to introduce any big reform due to the current fiscal condition.
Moving on to the next segment, we have an interview with Sachin Chaturvedi, Director General at Research and Information System for Developing Countries, or RIS, which is a New Delhi-based policy research institute with focus on international economic development, trade, and technology. Shreya Nandi asked some very important questions.
Hello and welcome to the BS Budget Show, Mr. Chaturvedi. Let's start with talking about exports first. So the IMF had come up with a report that a third of the world economy may experience recession in 2023. The World Trade Organization also expects subdued growth in 2023. To what extent can recession fears impact exports outlook in the next fiscal?
Excellent question, and I think the effort in terms of how we are looking at both in terms of identifying the possible sources of recession and also share the question in terms of how long that recession would last. As IMF has made it also very clear in their prospects report, is in terms of the temporary phase, the small phase that would be there. But even if it lasts long, impact on exports, if you see, I think if you look at the broad numbers that are there as destination of our exports, around 6 countries account for 40% of India's exports. So if you look at this whole number in terms of identifying the US has something around 14%. China has around 9.5%. Germany is somewhere close to 6%. UK is around 4%. Hong Kong is 3.1%. So these 6 countries, they account for almost 40%. So out of this, with China alone, the decline that has happened in our exports in last 1 year is almost 30%. So recession, no recession, decline is happening, and you may also expect a decline with US and China, where recessionary impacts are going to be more profound. In EU also it would come, but Germany is consistently trying to decouple trade, finance, and investment policies from rest of EU. And this has become a bone of contention, but that we would discuss another time.
The exports growth has been slowing. And in December, if you look at the latest data for December, the exports growth was around minus 12%. So what do you think can the budget do to address a slowdown in exports?
I think budget should do 3 things which are extremely clear. Number one is how do we reduce cost of production here so that exports become competitive. As you would understand, now 38% of India's exports are based on our imports of the intermediate products that we are importing. And we are importing almost 14.8% of intermediate products from China. From US, we are importing around 8.7%. With Germany 7.5%, Korea 4.8%, and Japan 4%. So, with this huge commitment that we have shared, the effort to bring forward the competitiveness as a feature, the budget should provide incentives to our intermediate imports that are happening. So any kind of duty structures that are there, we need to take a very, very generous view on this. And that, I think, would enhance the competitiveness. The second important point is the transition cost, the internal taxations that are there, for which some efforts were already made in the last two budgets, where we have tried to reduce, facilitate an early reimbursement of the expenditure incurred, and several schemes which we have tried to make compatible with WTO. They have helped. Even the PLI scheme has helped in a major way. I think more of such focus so that our intermediate products and their production domestically, which would be the part of the value chain. So if budget can focus on the value chain and create facilitating conditions for domestic production of some of the intermediates, which are like APIs and many others in the pharmaceutical sector, even in ready-made garment sector, that would help in terms of going forward. The third and the last is this huge promotion that is there for rupee payment, which is very much part of South Asia endeavor, as the Governor Reserve Bank has very clearly articulated. But I think it is also important for us to see which other countries we can bring in this fold. They all can help us reach out.
You also mentioned about Rupee Trade. So last year we saw that the RBI had come up with a set of rules towards the implementation of Rupee Trade. But nothing much has happened so far. We haven't seen much action as far as the Rupee Trade is concerned. So what, according to you, are the roadblocks as far as the implementation of Rupee Trade is concerned?
I think the mindset change that was required has happened. For quite long, we underestimated power of rupee and power of having the independent policies. As Governor in December itself said at the IMF meeting that we are committed and we would take South Asia rupee payment forward. I think now it would go forward. What I was recommending was to take it to Africa and take it to countries where we reduce the transaction cost, because what is happening is in terms of the burden and exchange rate burden, which is getting clubbed with our competitiveness. So that, I think, we would be able to resolve.
Let's talk a bit about free trade agreements as well. Last year, we saw that India signed 2 free trade agreements. One was with UAE and the other one was with Australia. India is also negotiating free trade agreements with a bunch of more nations as well. So when we talk about free trade agreements as such, do you think this could disrupt the government's customs duty collection? Do you think that's a matter of concern?
See, we did some preliminary calculations, and very often people try to connect FTAs and loss in revenue from customs. And this, I think, in RIS, my colleagues have done some calculations. If we see Australia, UK, Canada, and UAE With UAE and Australia, we have already signed FTA. UK and Canada are in advanced stage. But for analytical purposes, we just clubbed total imports from Australia, UK, Canada, and UAE, and it is in 2021 coming out to something close to $67.59 billion. The total revenue collection, customs revenue collection, would be somewhere close to $4.28 billion. And if I give the 5% rebate as usual FTAs provide, then the revenue forgone is somewhere close to $214 million 214 million revenue foregone with the customs. And that is just 1.25% of the total custom revenue that India has. So it is not such a big deal. And I think we need to realize, and that's the point I was trying to make, that we need to take a generous view, because eventually the revenue foregone should be weighed against the generation of economic activity that you would be doing. The firms gain, the exporters gain, the transporters movement, the production, the employment, the resource deployment, the freight corridors that are going to be populated with goods movement, etc. So there are several advantages which far exceed 1.25% of revenue loss. So I think this is something which we should very carefully analyze, and then I think we should take it forward.
So the government has been, closely monitoring non-essential imports coming into the country. Do you think that a hike in customs duty of non-essential imports would be the right strategy to contain trade deficit?
I don't think, Shreya, now we are in an age and time when we should bother too much about trade deficit. We should, of course, try to enhance our competitiveness, enhance exports. And as I'm telling you, our imports of finished good as a part of total imports has already declined. It is not that we are importing too much of finished goods. Finished goods, it's not very high. Even with China, with which we have the highest trade deficit, it is the intermediate products which are part of our value chains. Their imports have gone up. Total imports that we do from China, the share of finished goods is around 18%, which at some point used to be 32%. It has consistently declined. It is the intermediate products. And that's why I said in the beginning that more efforts in the budget should be to see how long-term competitiveness is addressed. Short-term trade deficit today, this much, tomorrow, that much. You have seen in last 6 months, so many ups and downs we have seen. Just last February, we were so jubilant about export expansion of 214%. What happened? So currency valuation, market recessionary conditions, temporary demand collapsing, everything, but they are cyclical. We should delineate our decision-making process, our policy discussion from these cyclical processes, which are very short-term measures. We need to take for the exports and for export competitiveness measures which are long-term, and I think budget should also take that view in my view. And as you have seen, finance minister has evolved this very interesting and useful exercise both in the 2020 budget, but also in 21-22 budget, to have some policy measures which are for 10 years or 5 years. So she has announced them from that perspective. I think trade also requires that approach.
All right. Thanks a lot, Mr. Chaturvedi, for your views and joining us for this show.
Sachin Chaturvedi of RIS wants the budget to reduce the cost of production so that exports become competitive. He's also stressed the need for a generous view on duty structures.
From international trade to a matter of secrecy. The Budget Nugget segment today is all about keeping the union budget confidential. Arup Roy Chaudhary will take us on a guided tour of the secret alleys of the North Block, the headquarters of the Finance Ministry, on famous Raisina Hill.
The making of the budget is an extensive exercise centered around the Finance Ministry, but it involves almost every government department, starting from the very top at the Prime Minister's office. The budget contains market-sensitive information like revenue, expenditure and borrowing projections for the upcoming financial year. It also includes information on the centre's plans for infrastructure, agriculture, rural sector and welfare spheres. All this makes it paramount that secrecy be maintained and no information gets leaked to the outside world. In two separate judgments, two high courts have held that leaking information about the centre's or the state's budgets is a punishable offence under the Official Secrets Act. This makes officials across ministries averse to leaking information to the media, industry groups or other stakeholders of the budget. While the budget is presented on February 1, the process of preparing the document actually starts in October of the previous year. It starts within the Finance Ministry when the Expenditure Department consults other ministries to discuss allocations and outlays for the coming financial year. These discussions are also expected to be confidential. On December 1, exactly 2 months before the presentation of the budget, the Finance Ministry goes into what is called the pre-budget quarantine. North Block, where the ministry is housed, is locked down. No outsiders are allowed without pre-arranged appointments. While CISF personnel guard the building, additional staff is called in between December and February to manage the access. It isn't uncommon to spot personnel from the Delhi Police or the Intelligence Bureau in the corridors of the Finance Ministry during this period. This is especially true outside the offices of the secretaries, budget division staff and other senior officials. Interactions with outsiders are prohibited and the secretaries don't even attend seminars, conclaves or any public event which have a media presence. And then comes the Halwa ceremony. Some 15 to 20 days before the budget is presented, the traditional Halwa ceremony takes place. After this ceremony, senior officials directly involved in drafting the budget and the printing press staff are locked inside the ministry. The printing press is directly underneath the Finance Ministry and these key officials are not even allowed to meet their families. Only the Finance Minister can leave the building at this time. While a Halwa ceremony did take place in 2022, there was no complete lockdown after it. The budget 2022 was paperless and the minister read the speech from a tablet. Still, it may be some time before the printing process is wholly decommissioned. From when the Expenditure Department starts consulting other ministries to when the Finance Minister begins her budget speech in the Parliament on February 1, every step of the process has been designed to keep the contents of the budget confidential. From industry bodies to market representatives and lobbyists to journalists, many try to gather information on what the budget might have this year. Still, its contents become public only when the Finance Minister addresses the House and the public at 11 a.m. on February 1.
Imagine if there was a novel around this secret mission.
Yes, that certainly would be a thriller. With that, we've come to the end of the 6th episode of Budget with BS. Do watch the next episode on Friday.
Thanks for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.